Glenn, obviously it was a crazy day for tech in the markets, big sell-off. Do you think you're getting caught up in that, or is this something different?
I have no idea. Oh, wow, I sound a little froggy. I have no idea. We had a great quarter. We beat our own expectations, analyst expectations. We guided up. So there's going to be volatility in the stock market. There's going to be volatility in the housing market, but we're going to keep taking share. So I can't worry too much about what happened to our stock in one day.
So let's talk about your outlook on the market, because there are some fascinating and, I don't know, maybe unprecedented trends happening right now. Obviously, you're seeing this record, people fleeing from cities, buying houses in other areas. You're seeing inventory really tightening up in some places. What are the trends that you would highlight?
Well, I think you did a good job. America is on the move. So right now, inventory is rock bottom. It's like a Soviet-era supermarket. The shelves are completely empty. I have never seen any market like this. We've had listings with more than 150 showing requests that are getting 30 or 40 offers. Buyers are bringing lawn chairs to line up to get into an open house. Builders report that their wait lists are 90 deep for a single unit. So it used to be that way in San Francisco or New York, maybe in Los Angeles or Seattle, but now it's everywhere. And it's just distorting the space-time continuum of these local economies. In Nashville, people looking within Nashville are spending about $400,000 to buy a home, but out-of-towners moving into Nashville are spending $700,000 or $800,000 on a home. So it's really just changing everything about that economy.
Does this change in, let's say, the second half of the year when folks are mostly vaccinated, or does this go on for several more years as part of a prolonged trend or shift in population distribution?
Well, I think there's a long-term migration trend that began before the pandemic. People were leaving major cities because there was an affordability crisis. And it may ease somewhat, but even when people are vaccinated, I think they'll be liberated to work where they want. Many employers are saying you can work from home, you can work remotely, and that has just created space for people to go where they want. Interest rates are probably going to increase, but 15% year-over-year price increases like we saw in December and January aren't sustainable anyway. So I hope that demand slackens somewhat to a more sustainable rate.
Speaking of what's happening in the public markets, obviously I'm sure you've been following the GameStop mania with great fascination. How are you digesting this as the CEO of a public company?
Well, I just don't think you can worry about how much your stock goes up or down in a single day. You just have to create long-term shareholder value by delivering better service to your customers, by taking care of your employees. There's a tendency in the press to look for a hero and a villain. And sometimes the smaller investor, the retail investor, has been seen as the hero and the hedge funds have been seen as the villain. But I'm not sure that's the right way to formulate it, just because almost everyone investing has made a king's ransom over the past few years, while the American worker has really struggled to see her income grow. So I tend to see all investors as really benefiting from the market's rally. And the folks I worry about are the people who are working their tails off and just earning a regular wage.
So if folks have made a king's ransom, are we in a bubble that's about to pop or popping, especially when it comes to tech?
Well, it's anyone's guess, but I know of deals where a firm is closing a private round, and the day they close, investors are offering to double the price. Lawyers working on SPACs did as many deals in February as they did all last year. So I don't think anyone believes that this can continue forever. And that's why when your stock goes up to 100 or goes down to 20, you just can't be too troubled by it because maybe you weren't worth 100 and maybe you weren't worth 20. Maybe you're worth something in between.
Are SPACs going to end badly? That's what Charlie Munger just said today. It's another bubble that'll end badly.
I don't think you can paint with such a broad brush. There are good companies that are going public via SPAC, and then there are other companies that are using that vehicle because they couldn't get out any other way. I do worry that if you are availing yourself of a SPAC so you can market future results in a way that a traditional IPO wouldn't allow, that it encourages bubbly behavior. So many of the companies going public right now through a SPAC, I think, would have a hard time through a traditional listing, through a direct listing. Certainly when you're trying to buy companies that a year ago you would have said have to get bought, now can credibly say, well, if you don't pay up, we'll go public through a SPAC. So I do think that it's created more liquidity in the market. It's added to the bubbliness, but you can't say that every SPAC is garbage. Some are really good.